You can owe the federal government nothing when you die and still leave your family a six-figure bill from the Commonwealth of Massachusetts. Not because you were wealthy, because you owned a house here. I'm an estate planning attorney in Massachusetts, and watching this does not create an attorney client relationship. Here is the gap almost nobody knows about. In 2026, the federal estate tax exemption is $15 million per person. Massachusetts starts at $2 million. That is not a small difference. That is a $13 million canyon, and a very large number of ordinary families in this state are standing on the wrong side of it. Now, $2 million sounds like a lot. It sounds like somebody else's problem. So let me show you how fast a normal life gets there. Start with a house. If you bought a single family home in Bristol County or somewhere along the South Coast 25 years ago, there is a real chance it is worth $600,000 or $700,000 today, maybe even more. Add a retirement account. 30 years of contributions and compounding put a lot of people between $500,000 and $1 million. Add ordinary savings, a car, and whatever's in the bank. And then add the piece that catches almost everyone: life insurance. If you own a life insurance policy on your own life, the entire death benefit counts towards your Massachusetts estate. The entire thing, the whole thing counts. A $500,000 policy through work never feels like an asset because you will never see a penny of it. But Massachusetts counts it. So a house, a retirement account, some savings, and a work policy and a pension, who never once thought of themselves as rich, has crossed $2 million. Here's the part that I want you to hear carefully, because most of what is written about this online gets it wrong. Massachusetts does not work the way the federal system works. Federally, you are taxed on the amount above the exemption. Massachusetts is not built that way. In Massachusetts, the tax is calculated on the entire estate, and then a credit of $99,600 is subtracted from the result. That credit is what makes an estate exactly $2 million owe nothing. The math produces 99,600, and the credit is exactly that, is what is canceled. But go above 2 million and the credit no longer covers the whole bill. What is left over is what your family owes. So the credit is not an exemption. It behaves like one right on the line and stops behaving like one the moment you cross it. That distinction is worth real money, and I would not trust an article that blurs it. Now, the filing side. If the gross value of the estate plus certain gifts made during life come to more than $2 million, the personal representative has to file a Massachusetts estate tax return. That is Form M706, filed with the Department of Revenue, and is due 9 months from the date of death. 9 months. That deadline does not move because the family is grieving. It does not move because the house is not sold yet. And the tax is paid in cash, which is the practical problem here. Most Massachusetts estates are not cash. They are a house and a retirement account. So families end up selling the family home or on a deadline in whatever market happens to exist that year to pay a tax bill they never saw coming. One more thing that gets very little attention. The personal representative can be held personally liable for the tax shown on that return if it does not get paid personally. So, if your daughter agrees to serve as a personal representative as a favor to the family, she is taking on more than paperwork. Let me clear up two things people get confused about. Massachusetts has no inheritance tax. Your children are not taxed on what they receive. The estate pays before anything is distributed, and Massachusetts law here is frozen to the federal tax code as it stood at the end of year 2000, which means when you read a headline about Congress changing the estate tax, that headline has nothing to do with your Massachusetts exposure. Nothing changes here unless Beacon Hill changes it. So, what actually helps? The good news is that this is one of the most plannable problems in the entire field. Massachusetts has no gift tax, which makes lifetime giving unusual powerful here. So, trust structures can preserve both spouses' thresholds, how life insurance is owned can be changed, but every one of those depends on your actual numbers, your actual deed, your actual beneficiary designations. I cannot tell you from here whether you are over the line. What I can tell you is that most people who are over have no idea and find out in the worst possible way. If you want someone to sit down with your actual balance sheet and tell you where you really stand, that is exactly what our free consultation is for. So call the Battello Law Group, let us look at your situation, and let us put together an estate plan that could save your children tens of thousands, if not over $100,000 on a normal $2 million or more estate. Thank you for watching. Please like and subscribe.